is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Thursday morning. We got about 24 minutes to go until the start of trading, and we got markets oscillating right where we were basically in the close of yesterday in terms of overnight action. We're positive by about 9 points right now in the S&P, trading at 4403. We're making highs actually above where we were most of the pre-market session. NASDAQ pulling back a bit. You're negative by 17 points. All things considered, though, you look where we were on Tuesday, pretty much holding where we were for the middle of the day on Wednesday. Right now, the Dow catching a bid. You're up 149 points right now, 34,983. And you got the Russell up more than a full percent, trading up 22 points right now at 2243. Russell, the only index pretty much dramatically away from their high. I say dramatically, but the way the Russell moves, give it a couple days, you might be up there. We're talking about 120 points to the upside, though. 2366 made back in March. Back to a 15-minute basis, we jump around to commodities, crypto, Bitcoin, pretty much steady after it had the acceleration early in the week, sitting right under 40,000 right now. Now, the dollar index is taking a beating today. You got crude trading higher by 59 cents, even in the last few minutes, crude catching a bid. You got the gold contract up $24 at 1828, and you jump over in terms of the dollar index. You're talking about a dollar index right now that is down 30 ticks to 92.01 right now, just in the last 24 hours of trading on the dollar index. All right, jumping around to what we have going on, we'll start it off with the two data points. GDP trails forecast even as consumer spending surges. So really interesting. We had two data points this morning. You have GDP, you have initial jobless claims. The GDP number is quite a miss, 6.5 annualized rate. Market was looking for 8.4 annualized rate. Household outlays, though, jumping 11.8%. So GDP expanded 6.5 annualized rate, following a revised 6.3% pace in the first quarter. Federal government outlays, residual investment, and inventories weighed on the figure. Personal consumption, the biggest part of the economy, advanced an annualized 11.8%. Inflation-adjusted value of domestically produced goods and services climbed to an annualized $19.36 trillion. That's eclipsing the pre-pandemic peak. So it's interesting when you start comparing it to the peaks that we had prior to COVID. The median forecast was looking for an 8.4% increase, though. Yield on the 10-year, slight moves. I mean, nothing really too dramatic there in a big way. Now you get into jobless claims. We're talking about 400,000. Seems that we're about stuck at right now. Market was looking for 385, 15,000 jobs, folks, in the span of, what we have going on in the economy. Not really a big factor right now, in my opinion. You get a lot of variance that comes in on a weekly basis on these initial jobless claims. And you still got areas of, as they call it, hot spots persisting in COVID. Florida, one of them to say the least. And I'm sure that is weighing on some businesses that maybe thought they were going to open and maybe thought that business was going to come roaring back. And as we have cases persisting in a big way, maybe that's not the case across the board. But we see about 400,000 right now. You get into continuing claims. We're talking about 3.27 million for the week ended July 17th. That's a week delayed as opposed to the initial jobless claims. Initial claims in Illinois, Pennsylvania, Texas saw the biggest declines last week. 5 states reported in excess of 5,000. California led the increase, one of the biggest states, the biggest state in the union, followed by Nevada and Tennessee. So there's your take there. Now, I'm going to jump around. We're a stock show, but the Olympics are going on, so we got a little bit of a spoiler on the Olympics. If you like to watch the Olympics, you like to watch the prime time, I don't blame you. You might not be ready for a little Olympic news, but we have Olympic spoiler. So if you don't want to do that, turn it off for about 60 seconds and then come on back. I'll give you a couple seconds. There you go. And pretty cool. With all the drama going on in women's gymnastics, you have Suni Lee. Most of us not familiar, myself included, because Simone Biles takes pretty much all the headlines. But she wins the gymnastics all-around title after Simone Biles stepping out of the limelight. Pretty cool how that happened. Now, I think she qualified like second or third or fourth in the qualifiers for that. She's a force in her own right, just kind of behind Simone Biles, I believe. But pretty awesome there that you have an American capturing the gymnastics all-around title after you had Simone dealing with some battles of her mental wellness. And we all hope she gets better. But pretty cool story there that she steps up to the plate, gets it done. I'm sure Simone is happy to see that as well, along with most Americans. Pretty cool story out there when I saw that hit the tape just in the last few minutes. That was. Okay, let's jump around to some of the stories we got going on this morning. What are we going to start it off with? We got a couple stories in terms of where we can go. Let's start it off with some of the companies with earnings. So we got Facebook with their numbers last night. Talking about decelerating growth. That's the big thing that you want to talk about here. Decelerating growth. Not too surprising in terms of the growth that they've had recently. $12 off of where you were yesterday. You were trading at 373. You're going to open at about 361 this morning. Decelerating growth is there a statement there in terms of where they go. Now, they may face some headwinds in terms of advertising as to do with the privacy and the trackability of their subscribers. But nonetheless, all things considered, they had some lofty expectations when you had Google numbers potentially, I think it was, on the advertising front. Not quite the same situation, and Google was not talking about that type of decelerating growth. I heard some great analysis out there on Facebook saying that the amount of time that we've spent on the internet, the increase in time that we spend on the internet over the last year and a half as our lives have adopted to a new norm of reality, maybe our internet time has increased by 20% or something like that. While Facebook has not been able to increase their ads correlated to that same amount of time, which means that maybe the increase of the amount of time that we're spending on the internet, Facebook is not picking up the proportional benefit of that. Yes, they're picking up a benefit, but not to the degree that our online agenda is growing, as in people might be spending a little bit more time on other avenues as opposed to just increasing the amount of time you spend on Facebook. And folks, I'll tell you, Facebook, in my opinion, it is not conducive to happiness in any way. I say it to people in my life all the time that Facebook is a place where people love to go to complain. Okay? Now, Facebook, TFNN has a Facebook presence on there. There's nothing wrong with that, all right? There's nothing wrong with keeping up with people's stories. It's an amazing piece of software and internet site when you think about where we were 20 years ago, right? If you really use it for just the raw sense of how it was created to keep in touch with your friends and family, and maybe you get to check in on the pictures of the friends and family or something like that, your extended friends and family. But that's not what it's become. In my opinion, it's just an area that people like to go on there and complain. I always joke that nobody, and there's probably people out there, and kudos to them, but nobody goes on Facebook to say, hi, everybody, today's a great day, I'm having a great day, thanks. They usually go on there to gripe, complain, drives more griping and complaining. Then that seems normal. It's not normal, folks. Get it out of your head. Live in happiness. Don't get stuck in the doldrums of people complaining on the internet, because the internet is full of that. You can find it wherever you want. And that's why I think, you see studies about the people that are on Facebook. It is not a breeder of happiness, folks. It is not a breeder of happiness in your life being stuck on a phone, on Facebook, watching people complain about anything they want to about life. There's my Facebook rant for you. But nonetheless, Facebook going to open down about $12. All things considered, though, this stock, yeah, we just ran from 260, folks. We're going to open above 360, okay? That's $100 from where we were trading last March. No, this March, excuse me. This March. We're still going to open, above where we were trading just this, 6 days ago. Stay tuned, folks. When we come back, we'll be talking to our man Kevin Hinks from TD Ameritrade Network Fast Market. We'll be right back after the break.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now up by about 10 points. We're trading at 44.04. We got about 12 minutes to go until the opening bell. You got the NASDAQ slightly in the red, down about 18 points right now. Jumping over to Amazon shares. So Amazon, with their numbers after the bell, quite the uptrend we've been in. You back it up to March. All the stocks, so quite the run we've had since March. Amazing. You had Amazon with a 2,800 handle, folks, back in March. Talk about a buying opportunity. You back this thing up on a 3-year weekly. Anytime you see these types of consolidations, folks, if you're looking to get in an equity like this in the longer term, right? I mean, we had an area here. You don't have to be a master technician to draw it on the chart in terms of the consolidation you had going on here. You back things up. I mean, really, you're talking about an area of consolidation pretty strong from all the way a year ago. June, we get above 3,000 for the first time. You chop around to that area. Now, you did take off in March, but you bumped up the upper boundary line. We make it to a high of 35.54 in April, okay? Just above the high we got in August, and then you begin to pull back yet again, but just reach that lower boundary line. Nonetheless, I mean, that was an area, folks. You know, you come down, you challenge the same exact area we had been in September. Okay, so you're talking about 6 months. You pull back to that area in March. Well, yeah, it seems like an easy one now, considering where we are. We're trading at 36.30, and you are, basically positive by about $5 coming into the opening bell. Amazon has their numbers tonight. Now, excuse me, I may sneeze here. Today, folks. But we'll power through. Okay, Amazon, $107 move. Nothing too crazy when you think about we're trading a $3,630 stock. You talk about 3% maybe in Amazon after the bell tonight. Okay, jumping around, what else we got going on? So there's a couple stories out there hitting some of the stocks that I follow. Now, Uber, which we have in my newsletter, not the morning for Uber right now. Now, Uber, folks, you know, this is an area, I've been talking in my newsletter again, nice area of confluence here. Confluence is when you take Fibonacci trends, two different trends from two different Fibonacci zones from different trends, line up in the same area. You have an area of confluence. All right, if you take the run that Uber had all the way back in November, remarkable, all these stocks, right? You trade from about $34 up to 64. Okay, Uber has bounced to the 618. We're back there now. We're back to about $44. And Goldman out with a story that they're pushing 2.1 million shares. Yeah, is that it? 2.1 million shares? Yeah, it's $2 billion of Uber shares. Nonetheless, trading a little bit lower. And Diddy, higher on the news that they may potentially be going public, even though they're denying that news this morning. I would not be touching those Chinese stocks, folks. All right, let's jump over to our man, Kevin Hinks. Every trading day, 11 a.m. Eastern time, folks. Fast Market on the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down the market action, talking about hypothetical trades, setting up those hypothetical trades. They walk you through trade management, folks. They walk you through defined risk. Kevin Hinks, good morning.
Good morning, Tommy. It's another day, another group of earnings that we're waiting for. And, it's funny. This market pretty much shook off a GDP data point that was good, strong at 6.5%, but not as strong as we were expecting. But the personal income or the personal consumption expenditures at 11.8. So if you break those two numbers down, Tommy, it's Americans have a lot of money in their pocket, and they're out there spending money. But I think the labor force and the problems there is holding back the expansion in GDP.
Yeah, I was surprised. I mean, we get the weekly jobless claims number comes in at 400,000. You could say a little lofty, but as we know, there's some variance in that number. And the expectation was 385. So if we're going to sparse 15,000 jobs with everything else going on right now in the economy, I don't think that's the biggest driver. But that headline GDP number, Kevin, in any other world, I always say context is important. Whether you're talking about the market, you're talking about life, context is very important, folks. All right. And we got a number that in context was almost 2% lighter, Kevin, than the market was looking for. And like you said, it didn't even blink. I couldn't even find on my chart. You're talking about a trading range right now in the S&P of 2 to maybe 3 points off a data point like that. How do you digest that in this market where you can miss, on that type of number? Is it just all about the next couple of months and where we go and not about, the last 3 months?
Well, number one, this market is reacting to Jerome Powell's statements yesterday. This market is acting on earnings from yesterday. That's why you see the NASDAQ down slightly, the rest up. I think this market is acting off of a number that, a year from now, Tommy, we're going to be praying for a 3 GDP. Right. And right now we've got a 6.5, better than last quarter, just not as good as expected. And, let's see what happens 30 to 60 days down the road when this massive group of job openings meets the U.S. Employee. And so let's see what happens. I think there's a big event coming in the next 30 to 60 days, and there's a lot of dust still to settle on this economy.
Man, there's going to be some fireworks, right? We're just not sure what they're going to be, in what fashion they're going to be lighting off, man. And yeah, so of course it's earnings like you're talking about, man. We got Facebook last night, a little bit of a disappointment. They're talking about maybe some decelerating growth. Their numbers just staggering. Billions of people on a monthly basis logging onto that platform. And of course we get Amazon after the bell tonight. What are you guys going to be breaking down on the program coming up in an hour and a half, Kevin?
We're going to trade Amazon in the second section of the show. Mike Folio's going to do a presentation on Amazon. And then we're going to trade Pinterest. That's coming out with earnings, and ExxonMobil coming out with earnings Friday before the open.
Nice. And Pinterest, man, amazing when you look at this stock, right? From $10 up to 90. I remember I was talking to you, I think, early on, Kevin, around the Super Bowl, saying I bought my first item off of Pinterest, a little onesie from my new man in the form of Tom Brady. But yeah, talk about a 7-bagger just from where you were prior in terms of the COVID lows of $10. But you only came into the year 2020 at about $20 on this stock. And Amazon, Kevin, you guys talk about this, and I was going to mention it. I wanted you to talk about it for a brief moment. Amazon's a $3,600 stock right now. Very difficult. You buy 10 shares, you need $36,000 of capital sitting in there. Options, one of the great ways, as some of these equities have pushed, stratospheric levels with their prices, that you might be able to actually trade some of these equities using options for much less capital than maybe the $3,600 for one single share of Amazon going into their earnings event with some defined risk on top of it. That's
right. Options give investors the ability to trade a stock like Amazon without investing, a large portion of their net worth to do it. So, yeah, you can put on a trade in Amazon that is a bullish trade or a bearish trade, and you can do it for a cost of about $1,000. And so we'll show you today how to do that.
You heard it. That's the most important part, folks. You heard it right there. I've learned so much from Kevin's programs over the years myself. I encourage you to tune in. They trade the markets. They set up the hypothetical trades, and it's really remarkable how things have changed, Kevin, in terms of a stock that enjoys the fact that they're pushing almost $4,000 per single share. But as options take off in this market, there's really not the same necessity, maybe, to open it up when options, we all know, are kind of where the growth is in this market on traders in a big way. Well, Kevin, man, we look forward to the conversation. We look forward to the education as always, and we'll be watching at 11 o'clock, man.
Have a great day, Tommy. Thanks for having me on.
Thanks for coming on as always, Kevin. Take care. Stay tuned, folks. When we come back after the break for the market open, we got the S&Ps positive by 8. Tech stocks slightly in the red this morning. Facebook in the red this morning as well. Dow up 140. We'll be right back after the commercial.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got markets trending higher. The S&P's up 13 points right now. We're talking about pushing the highs we had intraday yesterday at 44.06. NASDAQ 100 slightly in the red, just under 15,000 right now. Let's jump over to Facebook shares and see how they're trading. You're down about 3% on the open on Facebook, trading at 361 right now. You jump back to the Russell, up about 15 points, giving it up a little bit. Commodities, crude, heading towards $73 yet again. We were just at that level Yeah, that 9 a.m. bar, these are 15-minute bars you climb. Look at that acceleration. Crude hanging tough, 72.87. Gold up near 18.30 this morning, trading at 18.29 on the dot. And we'll take a look at the VIX. As this market proceeds higher, you get the VIX with the 17 handle at 17.55. And we'll jump to notes and bonds to finish up the wrap-up in terms of the markets. We got the 10-year. Now, check out where we were, right? There's your 830. You could see a little bit of volatility. You actually saw a little bit of a spike on that GDP number up to 134.14. But just like that, we've pulled back. I mean, that's a solid 8-9 ticks from that spike higher, but you're within about a couple ticks of where you were prior to that news. We're coming in at 1.27%, 1.273 to be exact on the 10-year. All right, jumping around to some of the equities with earnings besides Facebook last night. Comcast out with strong numbers last night as well. Comcast reported second quarter financial results this morning, not last night. 84 cents versus 67. How about a beat of almost $1.5 billion in 90 days? 28.55 versus the 27.18 the market was looking for. When you talk about high-speed internet customers, they added 354,000. Market was only looking for 270,000. The company said NBC Universal streaming service Peacock, 54 million signups as of this week, and more than 20 million monthly active accounts. Comcast, which does not split out free and paid users, reported 42 million signups across the U.S. in the first quarter of this year. Cable revenue, $16 billion, up almost 11% from a year ago. Now, here's the interesting thing about Peacock. The Olympics are going on, as we all know. NBC's got the coverage of it. They're pushing out some of the streaming services over Peacock for some of the events going on. I signed up for Peacock. This is just a personal experience through my Roku. Okay, so you got a streaming device of some sort, right? As in, I didn't go online. It was pretty simple. I signed up. I have not paid for anything, and I don't plan on probably paying for anything. It's not that advantageous. Maybe I would during the Olympics for 1 month or something like that. Just not going to be watching enough to warrant another service to add on top of the plethora that I have in my household going on already. But so I'm being counted in there. This is where, and Comcast is a great company, folks. I mean, this chart, check out this chart, right? I mean, this is the business plan they're going with is an interesting one. I think it's a brilliant plan to sign people up on potentially a free plan, a free streaming platform. NBC says, you know what, I don't think we want to be in the foray of competing with Netflix and Disney and Amazon Prime, because that's a tough battle. Why don't we push out the content we already have through Peacock? We have a premium version you pay for. Maybe they have some type of a free version that's ad-supported, okay? But, man, look at the acceleration. Prior to COVID, you're trading at 45. You're up almost 33% from where you were prior to COVID, let alone you've almost doubled from where you were at the lows of COVID. This year alone, you're up almost 20%. You came in the year at about $50. You're opening up about 1.5% today on their numbers, all right? Giving back some of the gains you had overnight. Point being, though, keep your eye on this one, because it's going to be interesting to see if these numbers, the fact that they do not split out free and paid users, and you have people like myself that just kind of click over, sign up. Okay, they've got an account for me. You can have my email address. I can check it out. Sounds good, and they include me in there. I don't envision they'll be getting money off me anytime soon. They might during the Olympics. After that, it's not happening, folks. It's not happening at all. Maybe I'll use their free service, though. Maybe, and they'll get to sell some ads that might be delivered to me. But I wonder how that's going to play out. And there's a reason why they're not splitting out free and paid users, folks, because I imagine a lot of those people that are signing up are doing the same thing I have. The thing about this that they're a little bit lost in is I consider myself pretty well educated in terms of how streaming goes. I haven't really dug into this one yet, but I don't even know the difference. Like when I was signing up for this, I was thinking to myself, oh, I wonder if I'm going to get access to watch anything by not paying anything. I don't even know. There's kind of this ambiguous deal, and maybe that's what they like. Maybe they like signing people up like that, and then over the course of time, you realize that really you probably want to pay for something. The messaging is just not clear. I wasn't sure what I was even going to get signing up. I just said, oh, there's some streaming. I'll sign up. I won't pay anything. We'll see. Nonetheless, strong numbers. Revenue, you beat by $1.5 billion over 90 days. This stock's been a rocket ship in a big way. And I imagine they're going to be selling ads. And maybe that's the best way that they can make that money, as opposed to competing for pay-for services with the likes of Netflix and Amazon Prime and Disney, et cetera. All right, Yum Brands with their numbers as well, topping estimates. Sales rebounded. Taco Bell, KFC, and Pizza Hut. Folks, stay away from the fast food, okay? Be healthy. You feel better. You live longer. I kid half what, but seriously, the Taco Bell, KFC, and Pizza Hut, folks, that's not going to get it done in life. Yum Brands reported second quarter earnings and revenue that topped analyst expectations. Americans love their fast food, though, no denying that. And folks, you got to splurge occasionally. We just do it in a little bit of an excess in America. $1.16 a share versus 96 cents. How about revenue? $1.6 billion versus 1.48. You jump over to Yum Brands, they were a little bit higher this morning. And staying with those gains, up about 2.5% this morning for Yum Brands. And look at this, folks. The markets are getting a lift. Remarkable. We're going to be pushing the highs that we had on Monday. We're up right now 19 points in the S&Ps. NASDAQ catching a bid. We're up 0.2% in the NASDAQ. Let's see how Facebook, if that's doing anything. Facebook rebounding a bit. Let's jump over to the Market Watch and see where we're trading. You got Google. Check out Google surging higher as well. Now that's, no, what just happened there? Go to the Market Watch. Okay, that's going to be, now this is interesting, okay? So check this out. Google, you got Alphabet, you have different shares, right? Class A and Class C, okay? You got the Class A shares up 3.2%. You get the Class C shares negative. What's going on there? Well, what's going on there is buybacks, okay? And they are now going to allow, I guess, buybacks on the Class A, I believe it is, versus the Class C. That used to be the only one that I guess there was going to be buybacks in. So you have a little bit of a divergence today, but basically bringing those two shares in line as the two different classes of shares are trading. So interesting when you see that. You actually have Google, GOOG. You add the L to it, though. Right? Is that right? Maybe it's not keeping up. Yeah. Nonetheless, not sure what's happening there, but that is the difference of those two shares, whether that was played out yesterday or not. So you got the chip sectors up big. Is this yesterday's? I think that might be slow. Yeah, they're giving yesterday's numbers on that, unfortunately. You jump over to the Market Watch. I love this tab usually, but these are yesterday's numbers is what's going on percentage-wise. Not sure why that's happening. Maybe it's taking a lag. You got AMD accelerating higher, though, extending the gains it had yesterday. Look at this pop. Right? You're pushing $100 on AMD. Let's see how NVIDIA's trading this morning. NVIDIA getting a pop as well, up 1.1%. Let's jump to the FANG stocks. Apple shares. Look at this, folks. You cannot keep a good market down for long. Apple is up $1 right now. Now, folks, there's 17 billion shares in Apple, almost 16.87 billion, something like that to be exact. Every dollar it moves, the market capitalization of Apple moves about $17 billion. Remarkable. Now, we're going to talk a little bit when we get back about Diddy. So Diddy's up 15%. News breaks early this morning from the Journal that they're thinking about going private. Probably not a choice they're making on their own, and that's a real option, folks, for sure, because they might get delisted. Might be one of the things that China forces them to do. Didn't take long, though, for Bloomberg to say that's not happening. Didn't take long for the company to come out and say that's not happening. There's better ways to trade in this market, folks, than trying to make money with these Chinese shares, at least for right now, in my opinion. Stay tuned. We'll talk about it a little bit more when we get back, though.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&P up 19 points right now. The NASDAQ 100 up 51 points. Look at these markets. Talk about resilient. The Dow sitting up 163, so a little bit of a divergence going on, right? You got the Dow basically where we were on the open. You got the NASDAQ 100 up a solid 80 to almost 100 points from there, and you got the S&Ps up 6 points as well. The Russell right where we were as well. So Russell and Dow not really moving much on the open, but the S&P and the NASDAQ catching a bid as we've seen happen before. So back to Diddy and Uber. So interesting that these two are correlated in a big way here. So you have the news breaking that Uber, that they're going to be pushing out 10 million, 45 million shares maybe? Was that the number? I think it was. It's SoftBank shares. So SoftBank is selling a portion of their position. And the reason why they're selling a portion of their position is to offset the losses that they've had from Diddy. When you start seeing this happening, folks, and you start seeing forced selling from some of the biggest players in the market because of losses in certain areas, China is hitting and can hit other areas of our economy because the pullback has been so harsh that you may have some forced selling in areas that are completely unaffected. Now, Uber and Diddy are combined, in the ride hailing, but there's an instance of one big fund, SoftBank, the biggest one out there almost in many aspects, being forced to liquidate a portion in Uber because of the woes of their investment in Diddy. Now, Diddy, as I mentioned, all right, they have the story that they may go private. And I understand why people are trying to bottom fish when you could go from $7 to $10 and you make almost a 50% pop from where we were just a few days ago. I get it. But you're playing with fire there, and there's nothing to say that this thing wouldn't even be lower than that in terms of dealing with basically state-owned companies in a big way in China. But interesting, and keep in mind, you start seeing that where some of these SoftBank investments in China, some of the investments in China that maybe some of the players in just the general markets had in general are going to force some selling in other areas. And you got Uber. Now, folks, we have Uber in my newsletter. All right. I want to see this get back above this area. You're coming right into the lows that we had in May 12th. You're talking about 43.17 down there. Now, I talked about, we got an area of confluence here. We got a 618 retracement from the full run we had in November. Okay. But what you also have is if you back this up to the full run we had from the lows of COVID, it's lining right up. Let me pull my Fibonacci number up here. It's lining right up to a 318 at that same exact price, essentially. You see where the 318 falls on that new one that I'm setting up there? Falls right at about $45 as well. That's the area we just pulled back to. All right, so keep your eye on that on Uber shares. Now, it's especially interesting as well. You back things up, okay? Prior to COVID, you came in at 41.86. With everything going on and the way that Uber Eats has dramatically accelerated during the COVID pandemic, now, yes, their Uber ride-sharing business has suffered during that time, but ride-sharing ain't going anywhere, folks. Uber is a new verb in the English language, that you're going to Uber to a party. Anytime a company's name becomes a verb in the English language, you know they're doing something right. I just imagine this area, $44. Maybe we'll come back and we touch this area we had coming into COVID. But folks, you got to back it up. I mean, this is the full chart of Uber going public here. Okay, so you're coming back to an area that was resistance back there in February of 2020, and you are back to the area basically we had the highs of July after it went public originally. Okay, so you got two areas that could find a bid in here, along with some confidence at about $45, but that's quite a pullback when you're talking about, you know, the run we had from November, which is when the efficacy of the vaccines began to become apparent. You've given back almost 62% of that entire move, from about $33 up to $64. We're back to $44.28 this morning on Uber, as they may lose their investment from SoftBank, or at least part of that investment. Okay. All right, what else we got going on? So, with COVID spreading and some certain hotspots, you got Disney, another stock in my newsletter, Rocket Equities and Options. You can check it out under the newsletter tab at TFNN.com, folks. So Disney's up about 0.7 with the market today. Nothing too big to shake at. What they do have going on, though, is that you're going to get mask mandates again indoors at Disney because of the spread of COVID going on. So Disney World and Disneyland are going to reinstate indoor mask requirements for all. You got Disney, and let's see when they pulled them off. I was reading this earlier. Somewhere in June or May, I think. Yeah, here we go. So face coverings remain optional for all guests outdoor. Disney World dropped the outdoor mask requirement in May. Disneyland dropped it in June. Okay, that's the outdoor they're talking about. But yeah, this is not surprising, folks. So what I'm going to jump to is, and you know, it's a shame that, like, I almost feel like people get frustrated when you talk about COVID because it's become so political, which is a real bummer, folks, because that just ain't the case. This is reality, all right? We're living in Florida, and in Orange County, okay, which is where Disney is, which is Orlando, you got a state of emergency here. You got hospitals filling up. It's that simple, okay? So you get the mayor declaring a state of emergency. He's going to be in a battle with the governor because the governor wants nobody to talk about anything to be an emergency in Florida with everything going on. But it's going to start to hit businesses, folks, okay? There's no denying that it's going to hit businesses when you're dealing with, and I'm going to get down to some of the numbers in terms of where we are. Excuse me for sliding here. Yeah, I mean, they have the highest number of cases since the pandemic began. This is Orange County. Okay, on Tuesday, the county alone had 1,371 cases. Now, cases are okay if everybody is potentially able to handle the virus, if they're vaccinated, and to eliminate the aspect of being hospitalized, okay? But the crisis continues at our area hospitals, okay? This is the mayor. They're seeing significant increase in COVID patients. On May 26th, Orlando Health had 61 patients with COVID. Tuesday, almost 300 patients. According to the mayor, Advent Health said they had 841 patients last year on July 17th, folks. They're up at 811. This July was not supposed to be the same as last July. And unfortunately, in certain areas, that is how it's ending up. When you talk about the vaccination deal, okay, it is a pandemic of the unvaccinated, folks, all right? People who are unvaccinated, yeah, they don't like that term. The hospitals are filling up with mostly people who are unvaccinated, all right? There's always outliers, okay? The vaccine isn't perfect, and the Delta variant is breaking through it in a big way, unfortunately, okay? But when it comes to getting sick, it is a much better situation if you're vaccinated versus unvaccinated. And the unvaccinated people are filling up the hospitals. That's going to result in possible shutdowns, which is going to impact the economy. There's nothing I'm saying that's political, folks. That's the reality that's happening, okay? And it's happening here. It's happening in Orlando. It's going to happen to the businesses in Orlando. You now got mask mandates back in Disney. And if you see those hospital numbers continue, all right, politicians, it's going to be interesting to see how DeSantis handles this. All right, he wants to pretend like nothing's happening. But when these hospitals start filling up, folks, you can't just pretend nothing's happening. We'll see how that plays out. But Orlando's dealing with it, and Disney's got mask mandates back inside. And not surprising. I mean, you got Citi coming out today that they're going to have workers wearing masks as well. Citi up about 0.9%, not to do with that, but it's happening more and more as these cases reach an undeniable level and hospitalizations. Unfortunately, I said to a friend yesterday, if you had told me at the end of May, okay, that by August we would be potentially pushing hospitalization being pushed to the max again, I don't think I would have believed you. So I'm not the only one, but unfortunately, that's where we are. And these hospital numbers, folks, even with the vaccine, so many people unvaccinated, they're filling up. And in Florida, it's undeniable at that level, and you're seeing it play out in some of the businesses. Stay tuned, folks. We'll be right back to finish up the show. We'll take a look at Amazon with their earnings after the bell tonight.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P up 16 points, NASDAQ up 50, the Dow up 109 right now. Jumping around to some of the stocks making headlines today. How about Nikola? Their founder is in federal custody right now. Jumping over, Melton. So you have Trevor Melton, charged by prosecutors by making false statements to investors. He stepped down in September, backing this thing up. Boy, you talk about getting out of wax, folks. You trade up to $93.99. Be careful on some of these stocks when, the story gets a little bit too real, too good to be real, I should say. Up to $94, you're sitting at $12, and who knows where this thing stops. But their founder is in custody for fraud, basically, this morning. Okay, jumping around to some of the other stories we got in terms of stocks that are moving this morning. We'll jump real quick before we take a look at Amazon. Ford's out with their numbers. They got a surprise profit last night. They were looking to lose a few cents. They make some money. They have an upbeat forecast as well. You got Ford up about 5% on their numbers. PayPal, different story there. PayPal with some tough guidance, down about 5.3%. This thing has had quite a run, though. You back it up to the lows of COVID. You were at about $76, $82 was the low there, up to above 300 with their earnings, but giving back some of those gains, down by about 5.3% on their numbers this morning. And we'll jump to Amazon. Amazon, some lofty expectations. We're coming into their numbers basically flat. And as I mentioned, we got a $112 move on Amazon. Not too surprising, though, when you're talking about a $3,600 stock. They'll be trading Amazon in the second block on the Fast Market program with Kevin Hanks and Alex Coffey coming up at 11 a.m. Eastern Time. And let's jump over to gold, folks. Gold catching quite a bit, up $27 right now. You're up at $18.32. You're coming up to the highs we had at about $7.30, and a lot of that having to do with the dollar. You take a look at the dollar. This is going back even at $8.30 last night. You see the slide. The dollar, we're talking about going from about 92.320 down to about 92 on the dot on that dollar index. A little bit of dollar weakness. We got some gold strength. All right, folks, thanks so much for tuning in. Stay tuned. We got our man Basil Chapman. He's coming up live next. I had to pause for a moment. Then we got Fast Market at 11, Larry at 12, Steve Rhodes at 1, Dave White at 2. And we got a guest host coming up for my dad this afternoon. I'm going to be back at 3 o'clock doing the afternoon show as well. Got a couple cool things planned for that as we come into Amazon earnings. Thanks so much for tuning in. Start your day with me, folks. Stay tuned. We got our man Basil. He's coming up live next. You're right.